Hey everyone, welcome back to another video. My name's Sam, and today we'll uncover the mysteries of the digital world and dive deep into the realm of cryptocurrencies, exploring everything from its inception to its global takeover. Whether you're intrigued by the technology behind blockchain or curious about the future of finance, this video will provide you with everything you need to know about cryptocurrencies. But before we dive in, we want to hear from you. Drop your burning questions or share your thoughts on cryptocurrencies in the comments down below. And don't forget to stick around until the end of the video so you don't miss out on anything important. Cryptocurrencies is a term that's been buzzing around for over a decade now, but what exactly is it? Well, let's break it down. At its core, cryptocurrency is a digital or virtual form of currency that uses cryptography for security. Unlike traditional currencies issued by governments, cryptocurrencies operate on decentralized networks based on blockchain technology. Blockchain technology serves as the backbone of cryptocurrencies, acting as a distributed ledger that records transactions across a network of computers. This decentralized nature eliminates the need for intermediaries like banks, making transactions faster, cheaper, and more secure. Now, you might be wondering, how and why did crypto take over the world? Well, the rise of cryptocurrency can be attributed to several factors. Firstly, the decentralized nature of cryptocurrencies empowers individuals to have more control over their finances, free from government interventions or manipulation. Additionally, the growing concern about inflation and economic instability in various parts of the world. Many people see cryptocurrencies as a hedge against traditional financial systems. This increased adoption has led to the widespread acceptance of cryptocurrency as a legitimate form of payment and investment. There are several methods in trading cryptocurrency, one of them being through cryptocurrency exchanges. These online platforms allow users to buy crypto using different fiat currencies and hold on to them with the expectation that their value will increase over time. They can then sell these assets for a profit if the price goes up. This method can be highly lucrative, but also incredibly volatile and risky. Prices can fluctuate dramatically in a matter of minutes, making it essential for traders to stay informed and make informed decisions. The second way is trading cryptocurrencies through CFDs. Contract for difference trading allows traders to speculate on the price movement of cryptocurrencies without owning the underlying assets. This means traders can profit from both rising and falling prices, leveraging their positions for potentially higher returns. However, the same also applies for their losses too. The risk is also maximized as traders can potentially lose from both buying and selling the asset. As of the date of this recording, which is the 30th of March 2024, there are thousands of cryptocurrencies in existence, each with its own unique features and purposes. Bitcoin, the first cryptocurrency, paved the way for many others, including Ethereum, Ripple, Litecoin, and many others. However, it's crucial to note that not all cryptocurrencies are created equal, and investors should conduct thorough research before investing in any particular coin. Having said that, there are a lot of traders who prefer trading cryptos over Forex or stocks. The reason why is because cryptocurrencies offer several advantages over traditional financial instruments. For starters, the crypto market operates 24/7, providing traders with ample opportunities to capitalize on price movements. Additionally, the crypto market is highly liquid, with low barriers to entry, allowing individuals from all walks of life to participate. Furthermore, the decentralized nature of cryptocurrencies appeals to those who seek financial independence and autonomy from centralized authorities. Okay, so let's summarize what we've learned today. Cryptocurrency is a digital form of currency that uses cryptography for security. Crypto operates on decentralized networks based on blockchain technology. The blockchain technology acts as a distributed ledger that records all transactions across a network of computers. Crypto empowers individuals to have more control over their finances, free from government intervention or manipulation. Users can trade crypto through exchanges, which allow the trader to buy crypto through different fiat currencies and hold on to it while expecting that the value will increase. Users can also trade crypto through CFD brokers such as FXGT, which allows users to buy and sell the coins without owning the underlying assets. There are thousands of cryptocurrencies, with Bitcoin, Ethereum, Ripple, and Litecoin being among the most popular. And that should cover all the basic details about cryptos. Let us know if you'd like to see a more advanced version of this topic in the comments section down below. We've also launched our brand new official FXGT.com blog site, which you can visit to read up on anything related to the markets in as much detail as you would like. We have multiple different topics that are tailor-made for all kinds of traders and enthusiasts. You can visit fxgt.com/blog or simply click the link in the description down below. Don't forget to like our video and subscribe to our channel. And hey, since you made it this far, here are 2 more videos that you might like. I'll see you soon.